Good morning. This is George Kachuk with RCM Wealth Advisors reporting to you from the CME Group trading floor in Chicago. What I'd like to talk about this morning is the state of the equity markets. The uptrend continues in the equity markets. We have the Dow once again above 16,000, got a little rocky last week. We have the NASDAQ pretty much well above 4,000, and we have the S&P keep straddling that 1,800 mark. But the uptrend does look pretty good. We talked about last week how we see some sector rotation, and we continue to see strength in the financials, which was a lagging group that picked up. The healthcare sector continues to be very strong, with strength in some of the individual biotech stocks, and the drug sector is moving up. Medical equipment stocks, the generic drugs are all moving up as well, doing very well. We also have strength in the cyclical sector, the retail sector, and specifically the restaurants have been, looks like they seem to be the strongest group in that sector. And then, of course, we also have technology shares, with the internet stocks being some of the stronger stocks in that group. And then we saw stocks like Facebook that are correcting, trying to round out their bottoms, LinkedIn doing the same thing, and other internet stocks like Baidu, SoFund that continue to lead higher. Twitter's also looks like it's trying to round out its bottom from its IPO day, so that's to be seen too. So that's where we're seeing the strength, basically technology, financials, healthcare, and cyclicals. Now, there's a lot of talk about the Fed tapering and how that's just going to end the market as we know it. It's kind of funny. You know, I think really basically you need to ignore this news. Fed taper really had nothing to do with corporate profits. In fact, last Thursday when we got the GDP report, that was up pretty well, 3.6%. But in that report, the most impressive thing was that corporate profits were up 7.4% on an annualized basis. You got record corporate profits. That's why the market's moving higher. The market's looking past QE tapering. Market doesn't even really care. It's corporate profits, earnings, that's what drives stocks. Now, if you recall last year, right about at this time, the world was going to end because of the fiscal cliff. It didn't happen. S&P and NASDAQ had a tremendous year. Now, that doesn't mean we won't have a correction anytime soon. That can happen anytime. However, keep your eye on the price and volume. And right now, the market's telling us that it's moving along steadily. In fact, it's not overvalued. The PEs are slightly below the mean of what S&P's normally been at. There isn't any exuberance priced into this market. In fact, the market's still very scared going forward. And that's why we actually have these lower PEs. So that's why I keep saying, as always, let price and volume be your guide. Don't take my word for it. Keep your eye and see what the market's telling you. Yes, we may have a correction. There might be a knee-jerk reaction once the Fed says that they're going to start tapering sometime. It's going to happen sometime. That's only normal. But as always, let price and volume be your guide. This is George Kachuk with RCM Wealth Advisors, reporting to you from the CME Group trading floor in Chicago. Have a good trading for the rest of the year. Thank you.